rest of the week, and this is, again, is the last week of the quarter. So a couple things. I keep promoting how to filter out trades. This is the euro currency. This is a 10-minute model, not a 5, not a 15. I think in a period when we start to see a contraction in the average true range, you got to kind of use a bigger, a higher time frame for signals. Now, once again, this system does a couple things. We had some good questions in the room by some visitors today. Why didn't this take a short position here? The answer, real simply put, this is programmed only to take trades in the slice of time that the trading room is open. The Algo 17 is a product that anyone can purchase now. It was exclusively built to develop strategies for ourselves, for our fund, as well as another entity. So Algo 17, it allows people to maintain a trading system, develop a trading system, whether they want to go long only, short only, and develop a trailing stop function. It already has a built-in position size model, whether you want to trade on a large amount, small amount of cash, put as many positions on with the amount of risk that you want to take, or what we call stagnant lot size. So if you're trading futures, you only want to do 2 contracts or 5 contracts or 10 contracts, you're allowed to do that. There's a scaling out feature that optimizes whether or not you should trail a stop or get out. This particular today's action in the euro currency, so I just want to go over that first and foremost. The program here only takes trades during the time that the trading room is open from 9 in the morning to the close. It will not take any new trades after a certain period as well. So by 2 o'clock in the afternoon, if you're not in a trade, it won't take new trades. And it also gets out of every trade for the trade room on day trades on the close. And so as you can see, we had a little bit of upside. It failed, went short, got stopped out, and it got nicked a couple times, but then came roaring back at the end of the day. And as you can see, has now exited all trades going into the close. Crude oil today. Now, again, this was already in a trade, which is something we do not, or at least I tried to tell people, listen, if you're in a trade, and again, this only takes trades, as you can see, from approximately 8 in the morning to our time frame that we have. So yes, if you see a big run up in crude oil in the European session, this would have an incredible performance if we were to show people the buy signals in the overnight session. But what's the point of that, having a trade room watching algos, if you can't A, have access to those trades, or B, the room's not even open? So that's my fiduciary and as well as my type of attitude for running a trade room. Be responsible for what's going on when people have the availability and exposure to the trades. That's the whole purpose of what we're doing here. I wanted to kind of go through a couple other little things. By the way, if you note here, I'm just going to cherry pick this one short right there. The blue is, and I think it would be best if I do it by an arrow here. Okay, so there's your entry. Here's your initial stop, the red. Red, if you're long, short the market and you have a red bar above, that would be the stop out. And blue is the profit target. You'll notice here that it does get out of half the position, enters in on 2, gets out of 1, and trails the stop on the balance. So what's the better way of doing it? Well, if you were in a really strong uptrend in the market, you'd want, if you, let's say, for example, the system went long here, and it got out of a profit target, you'd want to maybe have the availability. I'm not saying that it would with the trailing stop, but wouldn't you want to have the trade ride that trend at least somewhat? And that's what this does. Now, today is the API day, and you'll notice it got out a little before the Globex close. You'll notice here that it had a profit target. Blue is the profit target, red is the stop, and when we get into trending modes, you'll see new little red lines. Those are the trailing stops that are new trailing stops. So initial stop was right here. It gets at its profit target. Emergency stop is that orange. And if you notice here, look, gets stopped out on the trailing stop function. So that is the nature of this. If you are up money and you know there's a report coming up and you've been piggybacking this model, don't you think you want to get out at maybe before the report comes out? So we can't pick and choose and turn this off to make performance look better or worse. It's run as it's run. What we can do is, from a discretionary standpoint, is decide which signals we want to take. Now, below in the lower quadrant is my proprietary volume indicator. It's like none other, and I'm sure you would agree. It doesn't act like a on-balance volume. It's a momentum of volume in terms of percent changes. So it gives us better identification of convergence patterns at lows, divergence patterns at high. And here's what we were pointing out this morning. I don't know if you can see that little yellow line. That's a trend line that I drew in, and I said, hey guys, as the market is starting to fall, the momentum is weakening. So if you're looking at taking a short position, you may want to get out. Until we get a strong volume accumulation, you probably are going to look at, as long as that volume's moving up, you probably have a better idea of taking longs. Now, this was a very choppy time frame, and as you can see, there's pretty good signals and pretty good trades. Can we do better? Sure. In this case, and again, if I was to cherry pick, get out of everything before the market reversal. But, you know, here's the thing, and I want everyone to notice this. When you're in the live trading room and you're short the market, let's bring this up, because this is extremely important. This is what it's all about right here. If you get a short position and the market's going down to an identified profit target, I mean, in today's action, that's only about a 20-cent move, $2,200 a contract move. But if you're starting to notice as the price is falling and the momentum is rising, in other words, we're losing selling pressure, come in on all the positions. Don't maybe ride that all the way back up, or you can discretionarily tighten the stops. All right, so that's what we have there. Let's take a look at the S&Ps today. Gosh, I mean, we walk in the door, and yes, while we were up all night long, what's the key point here? The key point is, A, we only take trades when the room is open. And as you can see here, we already start off, and this was the very first trade. If you were in the live trading room, you heard me not only say this thing is long, I called this out. I said, look, low risk. So the entry was right here, and low risk was because this is the stop line. What I liked about that was that the market was up. The breadth was, or at least in the pre-market session, this again was before the open outcry. The stocks, and I'll show this to you in a minute, everything was bright green in the pre-market session. So we knew that there was going to be some pretty good liftoff on the open. So it almost came out and stopped us out, but it didn't. So that's kind of a good thing. But with that volume moving up, it was a great trade. So here's the situation. Instead of getting out at the profit target, do you let it ride? That's a hard one to say, but it was a great signal, and that's what we're looking at. The rest of the day, it was a pretty choppy scenario. I mean, it took another long and gave a profit, gave it up, went short, the market went down, got chopped up, made some money. You could see here, scratch. This would have done a lot better, but look at how the market today acted. It was very choppy on the way down, very non-trending for a market that was strong today. In fact, look what we did from the high at one point to the late afternoon, and then we came back and recovered. So this is end of quarter, this is window dressing, this is nervousness, this is China, this is everything, man. This is the real deal. Now I'm going to get to what we're looking at and what I think to do going forward, but let me leave you with this. When you're looking for a market on a strong day, what define a strong day? The advanced decline is there's more advancers than decliners. That's a strong day. We're looking to take maybe buy signal setups, and when you look at the move here, I'm going to just I want you to focus on the first primary low and the reading of the volume, and then the secondary low and the reading of the volume. You'll notice something here. The market made a new low, and this volume indicator made a higher low. That's convergence, and that gave us the idea that we might see liftoff. Why didn't it go long? Well, the darn thing doesn't take longs after a certain period of time. So that's the key function. Why? Because we're not here in late afternoon, and you don't want to really initiate a new trade after the open outcry close sometimes, maybe earnings season session or something like that. So I think the key takeaway here is you will also note that we formed a doji pattern, and if I change this up on the candlestick, you'll see a better picture of a doji. So from a discretionary standpoint, this probably would have been a better trade. Since markets lately, you'll notice there's dojis all over the place. There's dojis all over the place. They have to be traded more on a discretionary standpoint in lower time frames. I don't trust doji patterns when dojis are all over the place. I trust a doji pattern and my high close or low close doji when there's infrequent occurrence of that. So that's what I wanted to review with you guys. And then finally, let's take a look here at the 15-minute model. I mean, it definitely helped confirm this morning of going with a long position. Here was the profit target, and then what did it do? It trailed out. Here's where it went short on a incredible volume confirmation. So if the market is rising and the volume momentum is declining, guys, this is a great pattern for shorts. And when it clicks into a short, there it is. So I think a combination to help you improve your daily trading results and making money consistently is you got to filter out trades a little bit more, number one. Number two, you have to line up with that volume. There's a lot of different market analysts out there that use volume. I mean, market profiling is a form. But when you're looking at an algo system and you're looking at momentum changes, what's the best thing you can do? Obviously, the entry is important. Your risk factor is paramount, but getting off the train ride, that's the key. So there's no reason why someone can't use algo signals to get into a trade and override them to exit the trade. And that's why we have in the live trading room the proprietary volume indicator up for everyone. All right, last but not least, let's take a look today in the SPY system. It had a profit, had a bigger profit, and it got out. And then it had a couple little trades in here that we're going to see how this turns out tomorrow. Again, with everything that we see, I pointed this out that I wasn't a big fan. I thought maybe we were going to see the market come back up, and I pointed out on a video, if you guys remember, I said, there's the stop. Here's a trailing stop. This was the entry. Here's the initial risk. And what happened? It gapped higher than the stop, and it exited the trade. So when a price, and I just covered this on a 5-minute model, look at the 60-minute swing on spiders. This is a swing trade model. When the price goes down, but the momentum of the volume starts to show its weakening, you don't want to be in that trade. You'll take a look over here as a great example, another one. This is what's so powerful about coming into this live trading room. When you see the volume going down and you're in a short position, and you see that volume momentum give a bullish convergence, that's the kind of trades that we're really hunting for in the live trading room. And option traders, that's the kind of pattern you're looking for to either buy some long calls and look for a directional trade on those convergence patterns, or selling some premium, maybe put spreads, and collecting some do-re-mi on that regards. All right, let's wrap this up. Sorry to take so long, but I think there's some great lessons in here of how to better use the live trading room and make money. Let's take a look right now. By the way, we ended the day. The week has just begun. Yesterday was a killer day. You can see the volatility. We had some money to be made here. It went short in the VXXB. Didn't do a whole lot. It's got an open trade loss of a whopping $400 right now. But boy, I'll go through the performance in just a minute. It's really an incredible performance this year. Let's take a look at what I think is important to look at as far as equity trades moving forward. All right, a couple things that we talked about in moving forward. We've had, I know you don't laugh at me, but lean hogs. I'm a pure capitalist. I don't care if it's butterfly wings. If I have a high probability setup, I want to take it. Monday morning, this is our main trading room page that you see. Monday morning briefing. This is Thinkorswim. Again, we use for position trading a couple different platforms, and Thinkorswim for options, again, is our favorite, as I could basically say. So here's the story, gang. I know you're probably not big hog trader, but lean hogs, don't laugh at me. I know I said hogs. Let's take a look at the trend here. First off, we had a seasonal in our newsletter. If you read the newsletter, which again, my trading room comes with a plan of anticipated situations where we use seasonal analysis. We do our homework over the weekend. People get in their email box on the weekend a hard copy written report. They get an update weekly video and access to the live trading room, which again has 2 rooms, the main room and the algo room, so you can flip back and forth. This was what we have in the main room. Lean hogs, we had an express buy setup on a seasonality basis coming into this month. I'll show that to you in another video, but the moral of the story is we believe that the trend has run its course because now it's time to unwind that spread. So Monday morning I said, gang, this had a really wicked wild ride. We called this one. It was in the newsletter. It was a hog spread. You buy the nearby, sell the deferred. Spread made some sick money. The hogs themselves, every dollar or penny move, or if you want to call it from 76 to 75, is $400. So a market that broke out from around 76 to 96, and that's not including the rollover. This is the June contract. That's you can do the math there yourself. We're looking for the market to go in a consolidation period, and so what I had mentioned to everybody on Monday is look to take. It's probably going to go through a trading range, 2-sided trading here, and when the market starts to generate, if it's truly strong, it'll stay above the pivot. Here's an example where the market fell, got overbought, and then came right back up to close greater than the daily pivot, and in a nice trade. So whether or not, when I say a nice trade, I mean, if you buy something at 93.60 and then less than an hour later it's up to 95, you're 140 points richer. 140 points times $4 a point is not a bad trade, especially when you can define the risk and your reward. All right, moving forward, we're looking, as I was pointing out, if you don't like the equities in this last week, start looking for other higher probability trades. And when you start to see a market go from a strong trend, you're probably going to go through a consolidation sideways period, and that's what the lean hogs are doing. All right, so you're not a hog trader. Let's move on. But this, I think, we're going to start to see maybe a retest of the 92. You want to watch that over the next day or so. And our signals, whether you're using Trade Navigator, Genesis, whether you're using my indicators on TradeStation, or you're using the PPS on Thinkorswim, definitely they're applicable and work very well, the PPS indicators for buy and sell on the hog market. All right, next. This was Zine is in the pot sector. Gold, we were talking about gold. We needed a 2-day close greater than that line in the sand. We got one and a flop. That's an equal and opposite. Labu, I want you guys to focus in on the biotechs. One of the names that I like in the biotech, Gilead, G-I-L-D. Gilead Science has a strong upside potential. We did not close above the daily pivot, but if you do and you get a 60-minute signal greater than the daily pivot, daily weekly pivot, you got some good upside potential. Next, we have exposure to energy in our live trading room, as well as was written in the weekly thoughts and observations. One of the biggest trades or best trades that we had on a relative strength, and this is the PMC indicator, was in fact in Hess. And it was really nice to see that Hess was one of up 2.6% today, one of the best performing stocks in the energy space. So it's nice to be a part of that. All right. What I think moving forward is Watch your biotech, Labu. You get a daily breakout. It's going to be positive. We'll be focusing on trades on long Labu if we get the signals for tomorrow in the live trading room. Intel. Remember the other day I said I don't see a big crash coming, an unweighted butterfly like an 8 to 10 ratio long. So in other words, be long like 5 of the 52 half, be short 10 of the double nickel 55, and maybe 3 long of the 57 half on Intel. And I'm looking for Intel to stay kind of like above those strikes in between 50. And I don't want to put the needle through the eye of, or the thread through the eye of the needle, but that's kind of the trading range that I'm expecting. A neutral, slightly bearish bias on that unweighted butterfly. That's what we gave out in the video and in our live trading room the other day. So I think that's still a strong contender there. I'm leaving the bonds alone for right now. I want to get into a couple scans with you and we'll wrap this up. So cutting to the chase, you can see what's called the room recs. It's not a rec room, it's the room rec. What that is we are looking for brand new PPS or high close doji or PPS buy signals, number one, that have in category of stronger relative strength. So part of what we're looking at is simply this. A, Target, Costco, Twitter, TJ Maxx, Hess, Kellogg's, Facebook. Home Depot is improving. We have Anadarko, might be a little too much exposure to energy with Hess, and as well as disclosure, we're long Noble Energy. Gilead, there it is. Why do I like Gilead? Well, and Disney, of course. You know I've been talking about Disney. Gilead here. Again, we formed a daily high close doji. Let's look at the relative strength. It's improving. So what the signal I'm looking for tomorrow, which would be Wednesday, is if we start to trade greater than the last conditional change. But friends, if you get a daily close greater than 66.49, that's going to cause a potential liftoff. We want to watch for our volume indicator, but relative strength is improving right now, despite the fact this is weird. The relative strength is improving when the S&Ps are moving up. So that's a good warning signal to look for Gilead or Gilead or whatever you want to call tomato for an upside breakout. So I'm looking for fresh new buy signals, and that's what the radar screen here has allows us to do, with stocks that are either A, bright blue, right here, bright blue, and these are all the utilities, and I don't know how much higher they can go, but I'm avoiding them because they're all near quarterly pivot and monthly pivot resistance. I'm looking for stocks that have improved relative strength and are in fresh buy signals. That's what I'm looking for. So when you get down to consumer discretionary, the bottom of the food chain, Best Buy is in that category. It's bullish weekly, daily, monthly is looking good. Best Buy, but Disney is the one that you'll notice here generated a daily high close doji. That's the orange candle on your screen with the improved relative strength. No volume behind it. So why would I say I'm looking to buy? Because, gang, if we close greater than that gold line, then I'm looking, and again, watch out for daily, weekly closes greater than that pivot. It's the end of the week. It's the end of the quarter. Disney, my friends, I'm telling you, has a very powerful long-term pattern. I've been talking about it too much. There it is on a monthly chart. Look at the volume down below. This should give you the timing element of when to get into that trade. Could be a great trade for long call options. Next, we tried to get into Kellogg's. Kellogg's, look at that. Bright blue with all buy signals across the board. It generated a high close doji. We were trying to get in this the other day. It missed us by, I don't even want to tell you, it's embarrassing with the pennies, but here's the situation, and you can see that it finally has closed greater than that pivot and a last conditional change. I know it's Kellogg's. It's crazy, right? But it, to me, has the appearance of at least a couple week further upside move. How much would I say? Minimum objective, I think we go back up to 61, and then after that, $70. I mean, don't knock the Rice Krispie treat, and you can't make them without Kellogg's Rice Krispie Treats. Strong volume. So I know in the consumer staples, low risk, looking good. Semiconductors, it's too mixed. A lot of red. Did not join today's party, so to speak. And as far as technology, I'm going to lay off of this. The only name that really came up the screen here was, in fact, Facebook. Look, it's buy signal, buy signal, buy signal. And Facebook, it cleared that pivot resistance level. So I can go on and on about what I'm looking at, but I just wanted to tell you here's why I'm looking at these. And these were the trades in the room that I feel have the strong potential for liftoff. And because of the improved relative strength, the volume, and again, it also helps that it has a buy signal. Thank you all very much. I hope you found value in watching this, and I encourage you, if you like the video, give me a thumbs up. It helps others to say, you know what, this stuff really is good. If it's not good, then put a comment in and say, what would you like that's better? And someone has already said, try to get that resolution so we can see the charts. I get that. Just compression takes forever. Thank you for watching, and I'm really here as a true trader and a developer to see that the people that I'm responsible for succeed. And I want you to be a part of that community. Thank you.